Well, good morning, folks. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education section. On behalf of our Commissioner David Giorgino and our staff in Taxpayer Services and our Audit Division and the folks you'll see on here today, we certainly want to welcome you to today's presentation on Tennessee Consumer Use Tax, one of our least known about taxes and one that really reaches out and touches a lot of people that you don't even realize. So we'll look forward to the little presentation here today. Certainly want to encourage your participation as well. And also for follow-up questions, we'll be giving you some information at the end so that you'll have the ability to seek out assistance on any special issues that you might have. So with us today, I have Miss Katie Julian, who is our specialist in our taxpayer education section that works on the webinars and some other fun stuff that we do at the Department of Revenue. And also we have a subject matter expert with us from our audit division, Mr. Jimmy Favorman. So Jimmy, welcome to you as well. Glad to have you on board. And our Assistant Director, Dan Vincent in Taxpayer Services is here with us as well. So with that, we'll go ahead and turn this over to Katie, who'll walk you through a few things before we begin the presentation. Katie, thank you very much.
Thank you, Billy, and excited to have Jimmy with us today. Just a few things before we get started here. The QR code that you see on your screen right there, you can scan that to get a PDF of these slides that we're going to be going over today. I believe Dan and Billy might have also put it in the chat. The links that you're going to see on the screen, you cannot click from the WebEx screen. You can only access them from the PDF. So we're going to be sharing a few links, hyperlinks with you for various things. So you may want to go ahead and get that PDF. We will have a video of today's webinar up on our website. You can see the way to get there here. We'll have that up later today or definitely by tomorrow. What else? Okay, so chat. We will be opening the chat for your questions when we get to the end of the slides, and we'll have just an interactive conversation there with your questions, along with Jimmy Favorman from Audit helping us to answer some of those questions. And that's about halfway through. We'll get to those. I believe that's everything. Any questions that we don't get to, and we'll give you this information that you see here, how to reach out to us. We'll give you that again towards the end of the webinar as well. So like Billy said, today we are talking about use tax in Tennessee, focusing on the consumer use tax aspect, although there is an aspect of use tax that businesses will use. But use tax is the counterpart of sales tax. It became a law along with sales tax, and I believe it was 1947. Correct me if I'm wrong on that, Billy. It was either 47 or 49. But a lot of times people
It was
forget about the
47, Katie, you're right.
47. Okay. People don't really realize when they think about sales tax, it's actually called sales and use tax. So it is the counterpart to sales tax. All residents in Tennessee, as well as businesses, must pay use tax when goods and actually certain services, as of recently, are purchased from outside of Tennessee and then brought into Tennessee to use when whoever sold it did not collect Tennessee sales tax. We're going to be talking about some definitions, the imposition of use tax, which activities are subject to use tax, some exceptions. So it is the counterpart to sales tax, but there are some ways where use tax does not fall in line exactly with the way sales tax is imposed. How and when to file consumer use tax. We're going to share with you some resources, and then like I mentioned, we're going to go into chatting, getting your questions in the chat, and talking about some frequently asked questions as well. One thing I want to say too, use tax, the purpose of use tax is not only to raise revenue, obviously it accomplishes that for the state, but it's also to protect local merchants who must collect the tax by Tennessee law, have to collect sales tax. It protects them from unfair competition. You know, Tennessee does have a fairly high sales tax. We don't have income tax here, but we do have sales tax. And, you know, thinking that you can just go buy the same product out of state because their tax is not as high, that's not really fair to our local merchants. So it's one of the things that use tax accomplishes is to protect the local merchants. Just a few resources to share with you here. We do have a topic page on our sales tax tax page that is dedicated to use tax. There's a link there. There's a whole section in Revenue Help that is dedicated to articles and FAQs about use tax. Of course, the sales tax manual has a whole chapter and other various areas throughout the manual dedicated to use tax. And then to file the return, and I'll share this again and talk about it here in just a little while. To file the use tax return, you go to our TINTAP portal, and there's a link to that. An overview of use tax. It applies to purchases made for use, consumption, distribution, or storage for use or consumption in Tennessee. Again, like I mentioned on the slide before, when no Tennessee sales tax was paid. For example, just a few examples here. Um, Purchasing a product in another state or out of the country and bringing it into Tennessee for use. Purchasing something from a mail order catalog or on the internet without paying sales tax. When leased property is relocated to Tennessee during the lease period, use tax applies to each lease payment for periods during which that property is used in Tennessee. Um, this is an interesting one. Purchasing from a product from a transient vendor that does not collect Tennessee's tax. And that's a transient vendor is a vendor that comes into Tennessee to sell something while here. They're not always required, depending on certain tax nexus laws, they're not always required to collect Tennessee tax. So if they don't, then that falls onto you, the consumer. When certain services are performed on tangible personal property, outside of Tennessee and the serviced tangible personal property is shipped or delivered to a purchaser or someone designated into Tennessee for use or consumption. And I believe that's a fairly new law. Services used to never be subject to use tax. That's right, Jimmy?
Yeah, Katie, that's right. It used to be that, if you shipped your items outside of the state to be serviced and then they shipped your items back, that was not something that would be taxable. That I think that law just went into effect in July of this year. So part of it is, as you said previously, the taxes are there to protect the in-state vendors, but it's also to you know I believe the legislature had stated that the owner of the tangible personal property is enjoying the benefits of those repair services in the state of Tennessee. So that's another reason why that law change went into effect.
Yeah, I believe, if I remember correctly, it was part of the Tennessee Works Tax Act that actually passed a
Mhm.
couple years ago, and then this aspect of it, this use tax on services rendered on TPP, it went, like you said, went into effect on July 1. And we're going to talk a little bit more about those services here in a couple minutes. So thank you for that information, Jimmy. um, so let's see here. What is subject to use tax? It's going to be mainly in line with what is subject to sales tax, which is basically tangible personal property, things you can touch, feel. For more information, for a better, more uh, complete definition of what is included in the definition of tangible personal property, I am going to recommend that you go to our sales tax manual that we linked to just a couple slides ago. Um, but tangible personal property is subject to use tax. Computer software purchased out of state and imported into Tennessee for use, consumption, distribution, or storage or use for consumption in Tennessee. Computer software maintenance contracts, warranty or maintenance contracts that cover tangible personal property that's located here in Tennessee. Specified digital products. Uh, for more information about what is considered a specified digital product, we do have a webinar dedicated specifically to specified digital products. That's a lot of the same word. Or you can go to our sales tax manual. These are audio visual works. Things like that, video games. There are some services, as we just mentioned, and as we'll go into further detail here in just a minute, that are all subject to use tax. And again, that is if the seller did not charge sales tax on it and was brought into the state to be used in the state, then the user The person who purchased these items or services is personally liable for use tax. So use tax on services that we've just been mentioning, again, went into effect just very recently this past summer, July 1 of 2024. Use tax applies to repairing tangible personal property or computer software, laundering or dry cleaning, TPP, installing TPP that remains personal property after installation, and that's in personal property, not real property. There's a difference there. Installation of computer software when the repair, cleaning, or installation occurs at a place of business outside of Tennessee, and then that product that is service is delivered into Tennessee where the seller, where the purchaser or designee resides or will be using or consuming that. So if tax is not paid on these services, the Tennessee purchaser has to remit use tax on the purchase price of the service. That's new, so we definitely want to make sure that everybody understands that, new as of this year. Going back, yes, Jimmy.
Hey, Katie, I just wanted to little fun fact there for bullet point number
Yes.
2, laundering or dry cleaning of tangible personal property. One thing that a lot of people don't know in Tennessee is that your pets are considered tangible personal property
That's
by law,
right.
and so when you take Fluffy to go get his bath, if it's going to be subject to sales tax unless it's performed by a vet for some kind of medical purpose. That's going to be subject to sales tax. And we can dive in on bullet point number 3 a little bit more in depth. I think we get into it a little bit later. So if you are a builder and you're buying all of your lumber on a resale certificate, and you're building things like chicken coops, things that remain tangible personal property afterwards, then you're going to charge your customer the sales tax on that marked up labor, on that marked up um, lumber whenever you sell it. Now, if you're building something that's going to be real property, so you're building a deck, that lumber is still tangible personal property when you buy it, and as the contractor, you are considered the end user of that product, and so you're going to pay sales tax to Home Depot or wherever you're buying that lumber to
I'm going to go
construct
ahead
it.
and forward through,
Yeah.
since you're talking about this, it's a perfect time to segue into what was the next slide anyways, which is contractors, because this topic is definitely a popular one when it comes to use tax, right, Jimmy? And some confusion there, I think. And we do have a whole webinar that we did dedicate. You see that's on the last bullet here, a webinar dedicated to sales tax issues for contractors. And there's also, I think, a whole chapter on this, or definitely a large section about contractor use tax and sales tax issues in our sales tax manual. Are you aware of that, Jimmy? I'm pretty sure there's a good amount of info on it.
Yeah, I see this a lot where we have what's called a contractor dealer in Tennessee. So we have, let's say, somebody that has a metal fabrication business. They're purchasing all of their metal inventory for parts and everything on a resale certificate. That fabricator, let's say they fabricate a gate and they sell that gate to a customer, and that customer takes the gate and they install it themselves. They just fabricated a piece of tangible personal property and then they sold it to a customer as tangible personal property. So in that case, the contractor dealer is going to mark that gate up and they're going to charge sales tax on the sale of that gate to their customer. Now, let's add a little bit more to it. Let's say the same dealer or the same fabricator pulls inventory to build a gate. This time, he is contracted by the customer to go install that gate, and that gate becomes part of tangible personal property. At this point, the contractor is considered the end user. So when he pulled the inventory to build the gate, this is inventory that he purchased on a resale certificate. He is going to accrue the use tax, and he's going to report that on his sales tax return.
Mine
Of
too.
course, he's going to factor that in to the amount that he charges to his customer. He can't charge sales tax in that case because he's selling something that is going to become real property once it's installed.
Yeah, and then I'm glad you followed up on that too, Jimmy, because that's important. We get a lot of questions about that in taxpayer services. So just to reiterate one more time there, the installation into real property isn't going to give rise to sales tax for the contractor because contractors don't charge sales tax. But what they do, like Jimmy just said, is they accrue this use tax on these materials that they might not have paid sales tax on. The example Jimmy was giving is a contractor dealer who doesn't know if that metal is going to be used by a customer that walks out the door with a product or if it's going to be installed. So they get the tax advantage of using the resale certificate up front, but they have the responsibility to accrue the use tax. Okay. In the same way, too, that they have the obligation to pay use tax on any items that they might bring in from outside Tennessee, where Tennessee sales tax obviously was not collected on that as well. So that's another area as well. So yeah, great guys. Thanks.
Yeah, definitely a little bit more of a complex topic, contractors with regards to sales tax and use tax. But if you're a contractor on here or want more information about that, the webinar about this topic goes into a lot more detail there. So, like I mentioned, there are some exceptions. Use tax does not apply to everything that sales tax does. Tennessee law applies use tax specifically to some types of products, while others are not subject to use tax. So, use tax does not apply to personal items that are moved into Tennessee. So personal items, personal manufactured homes, personal automobiles moved into Tennessee. When a non-resident becomes a resident and completes a bona fide change of residence form, then use tax is not going to apply to items that they move into this state. I believe that this does not apply to property imported for business purposes or for aircrafts. So even if you move from out of state into Tennessee, an aircraft is still going to be subject to use tax, and then businesses moving items into Tennessee are going to be subject to use tax. The import for export provision basically means that if a dealer imports tangible personal property into this state, stores it in Tennessee without exercising any right of ownership, then exports it, the TPP is exempt from use tax because it is merely passing through Tennessee. There is no taxable event in that case. So, however, if a dealer does more than store, repackage, and inspect the TPP, then the dealer is considered exercising a right of ownership there, and this exemption would not apply. Um, Interstate commerce, title and property passes outside of the state. When title and possession passes from a seller to a buyer outside of Tennessee, the sale is considered in interstate commerce, and those products are not going to be subject to use tax. Tangible personal property held for resale, obviously a business that is buying something that they're planning on reselling, they should use their Tennessee resale certificate or streamline resale certificate in order to purchase those items. But I'm in the office this morning, I was just talking to one of my coworkers about a call that they got recently from a business that had imported some products from another country, and I guess they did not provide that they got a letter from audit saying, hey, you owe use tax, and the individual or the business just had to say, hey, these are for resale, prove to the auditor that they are going to be used in resale, and then no use tax is going to be due on that. And Jimmy, I'm going to bring you back in here for just a minute here. We were talking earlier about this tangible personal property held for resale. You had some interesting information about that when it comes to if it is a business bringing bringing stuff in through customs, right?
Hmm. Yeah. So for tangible personal property held for resale, if they were purchasing this from a vendor in Tennessee, they're going to provide that vendor with a resale certificate, and they're not going to pay sales tax on that. If they're purchasing their inventory from a dealer somewhere outside of Tennessee, that dealer may or may not request a resale certificate, but chances are they're probably not going to charge the sales tax either because they don't have any kind of economic nexus in Tennessee. So they're not going to charge the tax at for that purchase either. So what would have to happen is the taxpayer is going to have to just maintain their records that they purchased these items and they put them in inventory and the intent was for resale. And they can do that in a lot of different ways. Number one is just showing the journal entries that these items were entered in as cost of goods purchased on their books. You might be able, if you're asked by audit, you can even show where you have these items listed for sale somewhere or advertised for sale, and that's a good way to show that these were items purchased for resale.
I'd like to just ask Jimmy to touch on one thing. Katie mentioned personal items moved into Tennessee, like
Mhm.
motor vehicles. So
Yeah.
clearly, change of residency, we're not assessing tax on personally owned motor vehicles. Business owned vehicles are different. But boats, would you just talk for just a second about boats? Because we get quite a number of questions about boats.
Sure, yeah. So whenever boats are a little bit different, they're kind of like aircraft. Even if you're moving to Tennessee to become a bona fide resident, they are typically subject to sales tax. Um, Now, if you have a bill of sale, they're subject to tax on what you purchased the boat for. If you don't have a bill of sale, it's taxable based on the fair market value at the time it's imported to Tennessee. Now, there is an exception, and that is if the boat is valued at less than $10,000. When you're moving it into Tennessee and it's less than $10,000, there is a specific carve out that exempts that boat.
And that's something when you go to register the boat at your
Yep.
clerk's office, to be prepared if it is fair market value of over 10,000. Um, if you're moving it in, if it's a new boat, doesn't matter the value of it, you're going to pay sales tax. But we're talking
Correct.
about relocating a boat. You've moved to Tennessee from another state, and you're bringing your boat with you. If it's fair market value over 10,000, be prepared to pay use tax on it. Under 10,000, you can still just register that boat without paying use tax.
Correct.
Okay, great. Thank you. We work with Jimmy a lot with our group. We also work with the county clerks, and so Jimmy has a lot to do with with the items that get registered, vehicles, boats, all that through the clerk's offices. Just a few more exceptions where use tax does not apply. Services other than the ones that we just talked about on the last slide. All other services are not subject to use tax. Direct to home satellite, telecommunication, and amusements are not. No, those are items that are otherwise subject to sales tax, but where use tax does not apply. We're going to talk for just a minute about businesses that already have a sales tax account. All right. We just talked about contractors who may have a resale certificate, may buy items on that tangible personal property on that resale certificate, and then if they end up using them, then they're going to need to account for that and they're going to have to pay use tax on those items that they ended up using. Likewise, any business that buys something on their using their resale certificate and they end up pulling it from inventory to use it, that happens often in the course of a business. There is a way to account for that on their sales tax return that they're already filing. Here in a minute, we're going to talk about filing an actual consumer use tax return for people that don't have a sales tax account and are bringing items in to the state and need to pay sales tax. But this is for specifically people that already have a sales tax account, businesses. They're going to report those items that they pulled from their inventory that they used a resale certificate for, that they pulled out and used. They're going to report those on line 2. Enter the cost of all TPP purchased without the payment of sales tax that was not resold, but used. Line 3 is for the business to enter the cost of all TPP that was purchased or imported from out of state, including online purchases for use and consumption in Tennessee. So that's an example where the business I was just telling you about that imported the knives to be used, to be sold from overseas, those purchases would be accounted for on line 3 because they're imported from out of state. For both of these lines, do not enter the cost of items that are going to remain in inventory for resale. You're just talking about stuff that here that is not going to be resold there. All right, now we're going to talk about individuals and possibly businesses who otherwise don't have a sales tax account and wouldn't be reporting these types of things on their sales tax return, but individuals and businesses, how and when they file. TINTAP. We're going to walk through the steps here in just a minute on how to do it and where to go to file the consumer use tax return. There also is still a paper return, but everything should be filed on TINTAP. It's a really easy process. When to file? You have to file and pay use tax at least annually. You can do it more often than that, but at least annually by January 20th of the following year of the purchase. So if you want to just compile everything that you have purchased out of state over, for example, right now over the 2024 calendar year, you can file for all of those items, pay use tax on all of those items on a use tax return filed by January 20th of this upcoming January 20th. Now, Jimmy, can I bring you back in here on this topic because you explained it really well about how penalty and interest would factor into this due date.
Sure. So this kind of applies across the board for all Tennessee taxes as far as is interest and the filing due dates. So specifically with consumer use tax, the tax is due at the time that the taxable transaction takes place. So you import an item in July of 2024, it's taxable on July of 2024. Now we have the return is not due until January 20th of the next year. So we give you that grace period to actually file the return and pay that tax due by January 20th of the following year. And as long as it's filed and paid by that time, you're not going to accrue any interest. Now, if you've ever, the example that I like to use is if anybody has ever used a credit card and gotten a special promotional deal, you get 60 months interest free if you buy this item and pay it off within that 60 months. If you go past that 60 months, then that interest accrues all the way back to the date of purchase, and you now owe the tax plus interest, or the cost of that item plus the interest for that entire period because you didn't meet the requirements. It's kind of the same way with the way the returns work and interest. So you have that grace period until the return is due to file and pay the tax. Once you go past that period, then the interest is going to start accruing all the way back to the date that that taxable transaction occurred.
So if I bought an item on July 1st and don't file and pay use tax by January 20th, that interest started accruing on July 1st.
Correct.
Okay, great, thank you.
Mhm.
So those of you that have ever gotten a letter about an inquiry letter or a notice of proposed assessment about use tax, by the time you've received a letter from us, you've probably already missed the deadline, and that's why you're hearing from us. So you don't want it to come to that. Hey, Billy.
Something real quick, Katie, on the 10 tap filing, you are right. It is a lot easier than doing the paper form. Just one quick thing, the filing of that Tennessee consumer use tax return doesn't require a 10 tap logon like business owners have to have. So this is a lot easier. You can go out to our returns section on 10 tap, click on the link for viewing return links, and then you'll find Tennessee consumer use tax return. Complete the information there and move on. You could create a 10 tap logon if you wanted to. It's for a lot of people, that's just an extra step you don't have to worry about. So yeah, just want to throw that out there for you.
Right. It's super easy to file it
Okay.
online. Um, I'll go ahead and with that, let's see, was there anything else on this last slide? Oh, about the rate. The use tax rate is the same as the sales tax rate. It's going to be for most items, it's a 7% state rate plus a local rate. And there are some special rates. Food and food ingredients is 4% state rate plus the local rate. For specified digital products, there is a flat local rate, stuff like that. So for more information about those rates, follow this link here to see what the actual rates are for different types of items. So as Billy just said, 10 tap filing, super easy. You go to tn.gov/revenue, click on the 10 tap tile, and then from there under the returns tile, click on view return links, and then right there, file consumer use tax return. We're going to walk through that process real quickly. You'll see this screen pop up, which is basically just an overview of what use tax is, who needs to file, when, all the stuff we just talked about in the past few minutes. You'll just click next. And then there's a quick registration process. It'll ask you if you're an individual or a business. Of course, if you're an individual, you'll have to provide your social security number. A business would need to provide their EIN number. Also, after that, you click next. Part of the registration process is to provide your address. There's one step that's really important. There's a blue box. After you type in your address, you'll just need to click verify. It won't even, it'll error out and won't let you move on unless you verify the address. And usually that just, it's making sure our system knows what that address is. Sometimes it adds an extra 4 to the zip. That's the whole registration process. Then you click next. Very simple. The return is also pretty simple. If you need to zoom in here a little bit, you can zoom in on your WebEx screen. Line 1 of the use tax return, and you can see here when you're filing it online, it just kind of walks you through. We've already been on that informational page. Click next over to the putting in who you are, your address, and now we're at the use tax return. Line 1 is going to be your total purchase amount. And again, if you're doing this, compiling all of your purchases throughout a calendar year and doing it come January 1 in order to get to that, meet that January 20th due date, you can just put the total amount of all purchases here. It's going to ask you if any of the purchases were digital items. As I mentioned, there is a special local rate for those. That's why it's asking you there, and you'll have to put in the amount of digital items. The system's going to do the calculating for you. So it's just asking you for the amount there. It's going to ask you next if you've had any single item that exceeded 1,600. So if you're not aware, we have in Tennessee, it's called a single article tax. If there's a single item that is over 1,600, there's a way it's taxed kind of especially. I'm not going to go into it all right now. We do have information in our manual about it and a really good webinar about single article tax that can give you more detail there. But if you had any one item like a painting, a ring, a vehicle, a piece of furniture, stuff like that, we're talking high dollar items, maybe a purse, but any one single item that or multiple single items that were over 1,600, it's going to ask you that yes or no question. And then if you had any single items, then you will put those in and list those. A little worksheet almost comes up for you where you list what these single article items were. In this example, I have ring, $2,000. Again, the calculation's a little bit complex there. The system will calculate it for you and figure out what the tax is owed. Here you've got state tax on your purchases. In my example here, I had $5,000 in purchases total. Now that's your total. You're going to break it out a little bit below that, like here with a digital item with a possible single article item, the system is still going to calculate it all out for you on the state tax owed, the state single article amount that's going to be owed, and what that local amount is as well. And it will give you a total. Then you just click next, and it'll take you next to a payment screen where you can choose to either pay by ACH debit, and that is a bank account. It's not a debit card. It's actually providing you a bank account and routing. You can pay that way. Or if you click no there, you will be paying with a card. And then submit it. It's as simple as that. You do get credit for tax paid. Yeah, Billy, we'll
Just
go
real
back
quick,
one.
but going back to the credit card payment thing,
Yeah.
just a real quick reminder, if you do pay by credit card, there is a small fee for that. It is not anything that we get at the Department of Revenue. We're required to collect it so that it can be remitted back to state treasury to pay for the service of that card provider. So I just want you to know that in case you decide to make a payment by card, there is a small extra fee. And I think
Yeah,
it's
thanks
1
for
or
mentioning
2%.
that.
I'm sorry, I don't remember off the top of my
I don't
head, but
either.
it's something very small, but it is important to know about.
And since you mentioned that, some people get confused. ACH debit, a debit card is considered a credit card in our system for purposes of getting that fee added on to your payment. So ACH debit means directly from your checking or savings, directly from your bank account, even though it says debit. If you use a debit card, that's considered a card payment and you get the fee.
We would encourage you to try the bank account situation if that meets your needs, because clearly it will save you just a little bit of money there on that, because there is no
Right,
charge for that. Other
absolutely.
than the tax, of course. Don't forget the tax.
Right. Thanks, Billy. So for those who've purchased tangible personal property out of state and paid a legally imposed sales or use tax to another state, you do get credit for that, and tax is only going to be owed on the difference. If it's a lower sales tax rate that you are paying in another state, yeah, tax is only owed on the difference. And if you purchase goods in a state where it's a higher sales tax rate than Tennessee, I don't even know actually. Does anybody know if there are any that have a higher rate than us? Maybe one or two. Then you don't owe use tax to us. If you paid the other state a higher rate than what ours is, you will owe nothing to Tennessee. And Jimmy, I'm going to bring you back in here to describe a little bit more about what legally imposed, what's considered a like kind tax to our sales tax, because there's some taxes that they may pay in another state, but that's not considered sales tax, right?
Sure, yeah. We see this a lot, especially in other states that might not have a sales tax on certain goods. They might have let's say a personal property tax that's paid annually. That is not that's more of a privilege tax, and that is not a like kind tax. Also, if you're importing goods from other countries, a lot of times you're going to run into things like VAT tax, which is a value added tax, or U.S. customs duties. Those are not sales taxes, so we're
Okay.
not able to give any credit for those taxes. Now, as far as the legally imposed part of this, most often where I see this is, we have reciprocal agreements with other states, where, if you purchase a motor vehicle in, say, a state like Alabama, they provide where if you're a Tennessee resident and you're removing that state within a specific amount of time, you don't have to pay the Alabama sales tax. And so you're also supposed to fill out a form that says, I am not paying Alabama sales tax because I'm taking this motor vehicle back with me to Tennessee, where it will be subject to the sales tax laws in Tennessee. And so let's say a scenario where the dealer collects that sales tax anyways. We can't give you credit for that sales tax paid to the other state. What you're going to have to do is you would pay tax to Tennessee, and then you would have to go to the Alabama Department of Revenue or to the dealer and get a refund for that tax collected.
Great. Thank you for
Mm-hmm.
lining that out for us. I'm going to go ahead, y'all, and turn on the chat because we are through with the slides. So let me make sure I did that right. Let's see here. Anyone that's here with us today, you can chat with our panel and put any questions that you may have into the chat. I don't see any coming through, so I may have done it wrong. Either that or, oh yeah, here we go. Okay. We got questions coming in. There are also a few questions that came through. Billy and Jimmy and Dan, if y'all want to come back in and join us now, and we can start talking through some of the questions that we've gotten. A few questions came through on the registration forms that you submitted. A lot of them I think we've already touched on, right?
I think so.
A question I thought was really good is like, why would, how come sometimes I get charged sales tax and sometimes I don't get charged sales tax? When I have stuff ordered online, why do they sometimes charge it? Why do they sometimes not? And that's a question regarding sales tax nexus, right? Does one of you want to
Yeah,
take
I
that
can
one
I can
on?
touch on that just real quick. Nexus meaning presence in Tennessee, and if you look in our sales tax manual, which is very large, but has a great discussion about nexus and what that means. Um, Tennessee is like every other state. We can only ask businesses to register here that have a reason to register here unless they choose to voluntarily register. And there are some that do that. Okay. Because sometimes customers, it's a little easier for them to collect Tennessee tax. So we do want to make sure that people understand that if you do have nexus or presence here, that we do need you to be registered as a business owner and that. So that's why sometimes you'll find some businesses collecting that are not in Tennessee physically, so to speak, but others do have economic nexus here and are required to register here. I know that's a lot of words, but that's basically it.
Right. Thank you, Billy. Um,
What about that Canadian tax, Jimmy? What about that?
That's the value added tax, isn't it, Billy?
Yeah, that's not a state imposed sales tax that
Well,
is creditable. Am I saying that right?
correct. Yeah. I mean, value added tax, it's a completely different type of tax. Um, it's not, a sales tax based on the use of the item that is purchased or the cost. You'd have
Okay.
to get somebody from Canada to elaborate on the difference there.
we've got a question here from Scott about obligation regarding sales tax if I make a purchase on behalf of a nonprofit like a school or a church,
Mhm.
and what documentation is required. Now, there are some kind of more complex rules regarding a contractor when it comes to purchasing items for certain types of church construction. I'm not sure
Yeah.
about school, but I know we've got more information about this in the manual if you have anything to add to that, Jimmy. But it's a little different with a
Yeah.
nonprofit, right?
So I will say with the exemption for the nonprofit, that is an entity-based exemption. So if you're purchasing something for a nonprofit, that exemption only applies when it's sold directly to the nonprofit. So you're going to have to show that, the funds paid for this item came from the nonprofit. And so if you're purchasing something on behalf of a nonprofit, it's going to be taxable.
Hmm.
Now, as far as the sales tax, if I sell items to a nonprofit organization, you're just going to have to collect that exemption certificate from that and keep it on file in case you are audited. They'll want to know why you didn't collect sales tax on this sale.
Same with keeping, if anything you sell to if you accept a resale certificate or an exemption certificate from a nonprofit or from government, you want to hold on to all of those, right? That's documentation of why you didn't charge sales tax
Yeah,
for whatever reason.
right.
Great. This is an interesting question. What about county to county within Tennessee? Do we need to reconcile if there's a lower rate in one county or the other? And the answer to that is no, within the state of Tennessee, right, Jimmy? We're just use tax is just for importing items from outside of Tennessee.
Correct. And I think, if you're, let's say, going to a car dealer in Davidson County, but you live in Williamson County. Now, most counties now they have the same local tax rate, so it's not any different from county to county. But in even if you do live in a county where there is a different local tax rate, you're taking possession of the item in Davidson County, so you're going to pay sales tax based on where basically where it's titled at. So if
Okay.
if that dealership sends it to their local county clerk's office, I believe that sales tax is going to be charged based on the county clerk's office where it's titled at. Billy can correct me on that if I'm wrong.
I think that's the way I understand it too. Billy may have to. I think he's got an appointment he's got to get out of here too. Looks like he's still here, maybe just for another minute. We have got a ton of questions in here. We've got upwards of 400 people in this, and so lots of really good questions that I think there's probably no way we're going to get around to all these, and if we don't, we'll be sharing with you here in just a minute how to reach out to us. But I'm seeing lots of questions about how to claim that credit for tax paid to another state. And the best answer I have for that at this point in time is to reach out to us if you did pay credit in another state. Again, we're going to share our contact information. It can get a little bit complicated, especially if you're filing a return that's got multiple items on it that have been purchased from multiple states. If some of those are single articles. So if that's the case, I encourage you to reach out to us before you fill out that use tax return, and we'll walk you through how to figure that out. Let's see. There's so many questions. Jimmy, what are you seeing in here?
I'm seeing if you purchase tangible personal property from a Tennessee vendor that doesn't charge Tennessee sales tax, are we required to pay the use tax? And generally, the answer to that would be yes. If the vendor does not charge sales tax, then it falls on you to pay that use tax. Now, if it's, I would want to know there is that Tennessee vendor meeting the requirements to be registered. I know we have it's a very low floor, but if they're not generating enough sales to uh, pay that or to be required to register, then they're not going to collect the sales tax for you. And so we just need a little bit more information as far as that Tennessee vendor. Aside from that, if you have a Tennessee vendor that very, very obviously should be collecting sales tax and they're not, we do have a fraud hotline where you can report that vendor and we can take a closer look.
Yeah, that's a good point. Let's see, I just shared another link to the PowerPoint slides. There's lots of questions about that. It looks like Dan did too. We have so many questions.
So there's a question here about does tangible personal property include painting and or floor coatings, epoxy on garage floors? So it is tangible personal property when you purchase it. It's real property once it's installed. So if you're the contractor that's installing these floor coatings, you're going to pay sales tax to the vendor that you purchase it from.
Jane has a question. What about goods purchased using the resale but have not sold after multiple years? I don't think there's any time limit on reselling. If you're going to close your business, though, that's another subject, right, Jimmy?
Right. And there's nothing in the law that says that it has to be sold within a certain amount of time. You may be questioned about it if you're being audited. So, as long as you can show that, it was purchased with the intent to resell and that it's not being used. and maybe you have it listed for sale somewhere, then it would be fine. Now, if let's say you're a car dealer and you purchased a nice fancy car, um, and you've got it for sale for several years, and it looks like you purchased it, it had 75 miles on the odometer. Now you've got 120,000 miles on the odometer. It looks more like it's for use, and you're going to owe the tax on that. But yeah, there's nothing in the law that says it has to be sold within a certain amount of time. You just
Okay.
have to be able to show that documentation that it was for resale.
Okay. I got a contractor question here from Leslie. Just to be sure about this, if I pay Tennessee sales tax when I buy materials for a fence, do I have to pay use tax when I charge the customer? And the answer to that is no. If you have paid sales
Correct.
tax, and I saw another question, if I pay sales tax, why do I have to pay it again when I sell it? That's not what this is about. You want to
So
elaborate on that, Jimmy?
yeah, on that one, so you're paying sales tax when you purchase the materials to build a fence for a client. That fence, once you turn it over to the client, is going to be part of real property. So basically, the tax that you paid for those materials becomes, just a part of the goods, part of the cost of goods sold. So you're just going to factor that in whenever you're quoting your customer. You're
And
not
you don't
selling.
pass it along as a line item, right? You
Right.
can't say,
Yeah, you're
here's the
not
sales
gonna.
tax.
Yeah, you're not going to put it as a line item on your invoice. You're just going to, whenever you put the line item as cost of materials, that's going to include the total cost that it took you to acquire those materials. That includes the sales tax. You're not going to put a specific line item on there, but it will be built into the cost plus your cost of labor.
Right. We are getting low on time here and have just so many questions. I think we may have time for another question or two. Um, I'm trying to look for some that are kind of overarching and that might apply to a lot, because a lot of good questions in here. And again, we're going to provide you, I'm going to go ahead and switch slides right now so you see that, how to reach out to us with these more detailed questions that we've got. Um, Yep, another one about, is there a time when Janet asking goods that were purchased for on resale, if they need to be removed from inventory at any certain time? That is not the case. Well, Jimmy, if you have any that you're seeing in here that are jumping out to you that you want to get to before we wrap things up.
Yeah, I've got one more here. There is
Okay.
a question about Nexus. Somebody asked, some out-of-state companies collect Tennessee sales tax and some don't. What are the rules regarding who has to collect and who does not? And how does the consumer know this? So, several years ago, there was a Supreme Court decision that came down. It was South Dakota versus Wayfair, and the result of this decision established the concept of economic nexus within the state. And so, if you are a large retailer that sells products into a state, but you don't have any physical warehouses or production facilities in that state, you might meet economic nexus. So in Tennessee, if you have sales of greater than $100,000 into the state of Tennessee, then you now have economic nexus, and you're required to register and start collecting sales tax. If you have less than that, then you don't have economic nexus. You're not required to register. Now, as far as the consumer that purchases those items, you're going to be able to see on your invoice whether or not they charged sales tax. And so, if sales tax was not charged, then you're going to have to pay the use tax on those goods.
One more thing I want to touch on, Jimmy, before we wrap things up here, is about the process that your group, that audit, goes through, and then at some point, sometimes unfortunately, our collections division has when it comes to use tax. I know that, the return is due on January 20th for everything purchased the year before, and we do share data with some other agencies, like items that are brought in through customs. We get data about that. We do share data information with other states about big purchases, I know. But so if there's an item that we know came into this state and we see no return has been filed by January 20th of that next year, that's when things get turned over to the auditors, right? And they might get a letter, like, is it an inquiry letter? Is that what happens next there?
Yeah, so with U.S. Customs and with our agreements with other states, these are generally we generally have enough information to make an assessment to begin with, and so
Okay.
without having to send out inquiry letters. So we
Okay.
will send out assessments right away. Now, one of the biggest chief complaints that I hear is that, why did it take you a year and a half, 2 years to send me the assessment? And the short answer to that is we didn't know at the time when you imported it. There is a delay time between the time you imported the item and U.S. Customs provides us with the information. Now, on top of that, if let's say you imported something in July of 2022, um, the return is not due until January 20th of 2023. We're not allowed to send out bills for tax when the return isn't due. So by the time we
Yeah.
send out the assessment, it's already past due. And so, unfortunately, due to the time constraints between agencies and the fact that we're not able to send an assessment until after it's already due, there's going to be interest attached to any kind of assessment that we
Mhm.
send out. Now, specifically with customs, I will say we receive it's very generalized data. Usually, we're going off of a tariff code, which is a broad category that describes the items. So even though you might have an item that you purchase that is several $1,000s and it is subject to the local option limits and the state single article limits, we will not apply those because based on the information we have, we don't know if you bought a case of items
Mm.
or a single item. So we will make an assessment and treat it as though it's several items that don't require those limits, and then it's up to you to provide us the invoice that actually shows that this was a single item, and we'll make the adjustment. We're
Okay.
happy to do that. So
And on that note, if you do get a letter from us and it's from our audit division, or it's moved into an assessment, or even beyond that, a letter from collections, like a final demand letter, we always say this: definitely respond to that letter, reach out to us. If it's a letter from audit, there's going to be information, how you can get in touch with the auditor that's working with you. There's always contact information on our letters. These are not letters you want to ignore, because nobody wants penalty and interest to accrue on something like this, and we don't want that for you. So I know that when I was talking earlier with one of my coworkers about a call that they had got just recently, it was somebody who had imported something. I think it was some artwork or something, and they had moved a couple of times and didn't receive some letters, and that's just that's an unfortunate situation. And it's why we do webinars like this. We're trying to get the word out to where, and I know that at customs, I've heard, at least, that they give you information that you may owe, like some of that fine print when you're bringing stuff in says, hey, you may be liable for taxes in your home state, maybe, depending on where you live. But just it's a good thing to stay on top of, because you don't want to let that interest and penalty accrue. We're going to have to wrap things up here today, y'all. Jimmy, thank you so much for being with us and all of your insight. You really are the subject matter expert on this, and we so appreciate your expertise. You see here in front of you ways for that you can get in touch with us. We recommend that you send us an email to revenue.support@tn.gov or call our general tax line for questions about this topic. All the different ways you can follow us here to stay in the loop with our educational opportunities and other things. Speaking of the couple of webinars we have upcoming next month, these webinars are normally on the last Tuesday of the month. It's just a little early this month because of the holidays, but next month, one on January 28th is Liquor by the Drink, and the following month, February 25th, tax exemptions for military service members. We also have a new business workshop coming up in just a couple weeks, so you can register for that around the same way you registered for this event. Click on Taxpayer Education and Outreach, and then the new business workshop. You can only register for one webinar at a time. So later on today, we'll have the Liquor by the Drink webinar up there available for you to register for. And again, appreciate all of you coming and being with us today or watching the video of this if it's after the fact. Hope you all have a great Christmas and happy holiday. If you are wanting CPE credit on your way out, there's a survey that will pop up that one of the questions, the fourth question, will ask you if you want credit. If you do answer yes to that and need CPE credit for attending today, if you could please just answer the next question after that that says, how do you want your name listed on your CPE certificate? So again, thanks to everyone, especially to you, Jimmy. Loved having you as our special guest today. Bye, everyone.